All right, so I want to talk about momentum because this is just a very clear momentum play with Bitcoin breaking its all-time high. Yes, it is faltering today. We're down below the all-time high again today, 63,000. But overall, the momentum upwards has been astounding for Bitcoin, getting a strong move off of the bottom at around 30K. If we zoom in here, we're looking at the weekly chart, guys. We're looking at the weekly chart. It's important to zoom out so you can get the bigger picture, right? Then we found support on our logarithmic regression band here, our bubble logarithmic regression band. Basically, what this red band signifies is when and where Bitcoin comes into a bubble or is in bubble territory. Now, everyone freaks out when you start talking about a bubble, like, oh, you don't want to invest into a bubble. And while that's true to a certain extent because bubbles ultimately do pop and come down, we're really not in that large of a bubble compared to where we've been in the past historically. And not only that, but the overall global macro conditions are really conducive to a bubble. So it'd be one thing if crypto was in a bubble while the Fed was, tapering, interest rates were reasonable and they hadn't just doubled the money supply, right? Then we'd be a little bit concerned about being in a bubble. But with the money supply more than doubling in the last 2 years, we would expect hard money, a hard store of value like Bitcoin, to be in this bubble territory based on that alone, not to mention the 4-year market cycles where we get the halvings, right? So what I want to draw your attention to on this weekly chart is the RSI indicator. RSI is a good indicator for momentum and price action exhaustion, okay? So what we're looking at right now is the 14 period RSI on our weekly chart. And when you zoom out, you see that this most recent move out of Bitcoin that everybody's, and of course, if I draw on my chart, my other analysis is going to pop up. But when Bitcoin moves like this, everyone's worried, oh, Bitcoin's moved almost, over 50% in the last 3 weeks on this fourth weekly candle, right? We've moved from 40,000, 39,000, all the way above 65,000 in the matter of 3.5, 4 weeks. And that kind of price action can be exhausting in the short term. And of course, if we throw on our short-term RSIs, we're going to see that price is a little bit exhausted. And that could be why we're experiencing this little bit of a pullback today. But if we zoom out and look at the macro picture and we look at the RSI on the weekly, right? And I've even adjusted the RSI frames up here all the way up from 70 to 90, because on a normal, like on a stock in the stock market, anything over a 70 is considered overbought. But with Bitcoin and the circumstances that we're currently in and what we've seen with past market cycles, we really see the RSI peak for Bitcoin well over 90, right? So I've gone ahead and adjusted that variable on this RSI indicator up to 90. And I'd recommend most people do the same so you can keep track of the overall macro trend on Bitcoin to know when price actually becomes overbought and there can be exhaustion. Right now, we're not really anywhere close to exhaustion, right? We could have a little move down, a little break, because we did have a nice big move recently. But the RSI is still down here below 70. Still below overbought by normal standards, let alone Bitcoin standards. And if we look at historically where we've seen RSI peak at, it's usually above 90 or usually at least above 80, right? I also want to draw your attention to the frequency of these RSI peaks for Bitcoin and talk about the difference between this market cycle and last market cycle. This market cycle's RSI is very reminiscent of actually 2 market cycles ago, right? The last market cycle in 2017, we had this period of Bitcoin really ramping up and then crashing, ramping up, crashing, and not crashing, but 30, 40% pullback, but then coming right back. Whereas the RSIs and the overall market cycle has been longer, more drawn out this market cycle, which could be conducive to expanding market cycle theory, which would see this Bitcoin peak happen maybe sometime in 2022. Now, there's a couple reasons why I think we're going to get a lot of buying pressure here in November and December, and some speculation. But I do also think that we could see a peak this year for at least an interim peak within this market cycle. Maybe we see a triple peak market cycle with the final peak happening in 2022. But I do think there's going to be a lot of incentive for people to take profits, people and institutions to take profits in December, in large part for tax reasons, to set aside money for taxes, as well as to harvest any losses to count against their capital gains tax. Right? There's also the risk of the current administration upping capital gains tax next year. Right? So people may want to lock in the long-term capital gains tax that we have this year, so they don't have to worry about what the regulations for capital gains could be next year. All of that could be conducive to price falling, right? Price falling, getting an actual top in November, December, assuming we see a nice, big, aggressive move out of Bitcoin first, right? And I know that we are capable of seeing that big, aggressive move because RSI momentum is still not overbought, right? So what this looks like to me is reminiscent of our double peak market cycle back in 2013 and 2014. Really not even 2014, 2013, right? Where we came up, had a nice big peak, came down. And of course, back in 2013, the market's going to move a little bit faster because it's a less mature market. Now that we've got a more mature market, we're still seeing the same price action or the same action on our momentum indicator, but we're just seeing it in terms of lower volatility, right? These actually measured moves are absurd, right? These are like a 20x. This is like a 20x move from the bottom of July 2013 to its peak at 1100. It's very, very fast moving when the market was young, right? The other thing I want to draw your attention to is the fact that while we are making a new all-time high, we are in bubble territory, as I mentioned, right? And we know that the ideal time to buy crypto is down here on this green band. We know that that's the ideal time to buy crypto, even if we can buy it below the red band, right? Buying below the red band and accumulating crypto below the red band is really ideal, because then we are setting ourselves up to take profits above the red band in a bull market, in a bubble. So while we're above this red regression band, it's really our mindsets, right? If we're looking at previous market cycles, our mindsets should not really be on buying. It should be on taking profits right now. And I'm as bullish as anybody right now. I do think we're going to see a big aggressive move out of Bitcoin. And if we think we're going to see a big aggressive move, then it makes sense to buy. However, the risk of buying here at 62,000 now, Bitcoin's dropping a little bit, is significantly higher than buying when we're down on this green regression band. So if we're going to be buying, we probably want to be buying the momentum play, and we want to be ready to get our money out in a shorter term trade. I'm not sure that I would be buying to hodl Bitcoin, or really any cryptocurrency for that matter, with the exception of maybe Ethereum, because you can make a really strong argument for ETH supply shortage right now. However, I'm not sure I would be buying with the sole intent to hodl long term right now. Because we are in this bubble territory. That being said, I'm fine with buying right now. I just don't want to be so married to that whatever I buy that I'm not willing to sell it at a higher price if we see an aggressive move. Because I don't think that 65K is necessarily the new floor for Bitcoin. I do think we can see Bitcoin's price, and we're actually seeing it today, coincidentally, but in the future, unless Bitcoin can really rally and push to multi-$100,000 valuations in the next year, I don't know that Bitcoin's not going to come back down to test 40K again in a bear market. Remember, in previous bear markets, we saw 85%, 88% dips, 88% corrections. And when people were buying at $19,000 Bitcoin, they never dreamed. They were buying at $19,000 and they were buying there because they didn't think it was going to come back down to $3,000 ever again or $4,000 ever again. Yet it did. Now, Bitcoin runs to $300,000. Could the new floor in a bear market be 65K? Sure, maybe that is the new floor in a bear market. But if Bitcoin only runs to $80,000, $100,000, $120,000, $140,000 in a really nasty bear market, right? The Fed starts tapering, starts getting things under control, right? Maybe, just maybe, we see Bitcoin come back below this. In which case, buying long-term for with the intent of hodling long-term at these prices makes less sense. I'm all for hodling. I'm all for buying Bitcoin. I'm all for buying crypto and hodling it long-term. I'm very, very exposed to crypto. That's 99% of my net worth is in crypto. But remember, we want to be accumulating for hodling reasons down here, all right, below this red band. And when we're above this red band, our mindsets should be shifted a little bit to, all right, where's the next profit-taking opportunity, right? If we bought down here, right? If we bought this dip that fell below this red regression level, we bought at 30K and now we're at 62K. All right, where's the next profit-taking opportunity, right? And I'm going to actually show you that for Bitcoin on this chart. Right. So our next profit-taking opportunity for Bitcoin is, in my opinion, around $79,000. Right. And I'll zoom in here so we can see the price action a little bit better. As long as we find support around $58,000, I'm not too worried for Bitcoin. Right. We are crashing a little bit right now. Prices is falling down. Alts are getting hammered, giving back everything that they gained yesterday. In the short term, as long as we find support on this bundle of margin pressure levels and we don't drop below 58,556 in the short term, I'm not too worried at all about Bitcoin going down. And to be quite honest, Bitcoin could drop all the way down to this long-term trend line at around $42,000 before we really have to be worried about a bear market situation. So if anyone's panicking right now that Bitcoin's just shed $2.5 grand off its price, I'm not too worried about it yet. Right, I actually think this could be a good dip buying opportunity for anyone that may be interested. But the next profit-taking opportunity, the next big resistance level for Bitcoin here is at about $79,200. Right. And that's because it's the 2x margin pressure level off of this local low down here, right? Our most recent correction. And this is the point, $79,200 is the point at which you can no longer, right, as Bitcoin's price comes through $79,200, it's the point at which you can no longer go leveraged long on 2x leverage and hide your liquidation point below the last correction, right? So that's the level I'm looking to offload a little bit of crypto. Am I going to sell everything? No, because crypto we know that we see parabolic run-ups in bull markets. We know crypto can go, we know Bitcoin could go to 100K. We know it could go to 120K. We know the total cryptocurrency market cap, which is at about $2.6 trillion as of this morning, can go to $7.5 trillion. Right. So am I going to sell everything up here? No, I'm going to trim 5%. I'm going to trim 10%, maybe 15 or 20% if I really want to be aggressive with my profit-taking strategies.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.